Hi, it's Doc Severson of Ready Set Crypto with your 1-minute market report for Friday, April 12th. Over the last few market minutes, I've warned not to chase after parabolic rallies, and volume profile analysis showed an initial upside target of 5,500. I'd say mission accomplished on the initial target, and chasing after this rally at that point was a low probability entry. But everyone got too bullish way too late in the move between all of the crypto news sites and Twitter. This is all I heard yesterday. So will the market find support here and bounce, or will it collapse in a heap back down to 3,000 again? I don't know. I have no way of knowing what will happen in the future. Look, I know you might be saying, come on, Doc, that's what technical analysis is for, predicting future moves. Nope. If you believe that, you're doing it wrong. Technical analysis shows me where the statistical edges lie and allows me to make decisions from there. It's not about predicting the future. It's about giving yourself a decision framework to know what you are going to do, whether the price goes up, down, or sideways. This is a really subtle point, but if just one of you makes this connection today, then making this video was worth it. Let me give you an example based on Bitcoin versus the US dollar price today. Let's say that we're trying to understand a point where the price might bounce, and if it doesn't bounce by that point, then it's likely heading all the way back down again. Would you find that useful? I know I would. That's not predicting the future. That's giving me a decision framework. It allows me to prepare ahead of time for what to do based on the outcome instead of predicting the future and being a deer in the headlights when it goes the opposite way. When price is sort of hanging out in midair after a big rally flagpole like this, I tend to use the fib retracements, and I'll do it on multiple time frames. We really have swings happening in two different time frames. First, the weekly swing, and then the most recent daily swing. Let's draw those fib retracements in both time frames. First of all, from the weekly swing, which began down here, just over 3408 on Bitfinex, and drawing it all the way up to the top. All right, so we've got our basic retracements, 23.6, 38.2, 50%, 61.8. Now what we want to do is do the same thing for the daily swing. And I believe the daily swing started here at just below 4,000 at about 39.50 or so. So we'll do the same thing there. Draw those fib retracements starting from this swing here all the way up to this level right there. Now, the question is, do these retracements meet anywhere? Do they conjoin anywhere? And I think what we can see is that they do join right around this level right here. This is what we call a confluence. So this is the 38.2 retracement of the weekly swing. So this is the weekly swing here. And then we have the 50% retracement of the daily swing. So the daily swing is this one right there. So these meet in the middle at this point, the 38.2 of the weekly and the 50% of the daily, right around the 4,700 level on Bitfinex. It's going to be a different price depending on which exchange that you're currently charting. Now let's add to this chart by looking at the volume profile for this range. Recall that I said last week that big candles don't create support or resistance, and that price tends to move between the high volume nodes. Note that if price drops below that 4,700 level, then there's literally an air pocket below there all the way to the next level of support at 4,200. So what are my conclusions from these two data points? Right now, price is doing exactly what it should be. Range expansion to the upside leads to range contraction. So yesterday's pullback was exactly what I wanted to see. But how much of a pullback is too much? When it starts to become a real reversal. Based on these two data points and these two tools, I would want to see the price hold above 4,700 on this exchange to stay long, and it might even be a long entry for some pullback strategies that we discussed earlier this week. Otherwise, if the price drops below 4,700, on this exchange, then the probabilities increase for it to drop all the way back to 4,200 again, which is not necessarily a bad thing if you compare this move versus an equal one in 2015. Am I predicting the future? I don't think so. I'm creating a decision-based framework for myself so that I know what to do going forward. Is this a different way of looking at charts and probabilities for you? Let me know in the comments below. Thanks for listening. We'll see you in the next edition of 1 Minute Market here at Ready, Set, Crypto.